What's good, everybody? Take a look here at what happened today. So on the hourly, we had hit a another daily swing point, right? So we actually can go to the daily. This daily high is also a weekly high, so pretty important level here that we hit. You'll see we hit that on the hourly. That's what we end up kind of going long into in the morning, and we'll share that. But basically we're okay going long because if we look at a 5-minute here, on this 5-minute chart, so we have London, New York, right? New week opening gap is this white shaded area here as well. And then this is the previous day high. So just so we understand what levels we're looking at. Here in London, we create the low, right? London's low is also now a YouTube model. So we've cleared equal lows. We clear those equal lows, we break structure with the high here and here. And then we hold the bullish fair value gap. So London's kind of set into motion this idea of wanting to continue higher, finding support here within the new week opening gaps, starting to push higher. And as we follow price now, notice how every 5-minute fair value gap gets respected. So anytime that we continue to run higher, that new discount that gets formed gets held. So this fair value gap, we already mentioned this one. Well, now we can look at this fair value gap that was created perfectly aligned with the old daily high. We like seeing things like that. That holds, we push higher. Once again into a buy side pull here. So we're clearing the buy side with another 5-minute fair value gap that holds. This most recent one, so we have this tiny one here that stays open even. But just trying to point out how all the discounts are holding us. So it's very clear that order flow right now is bullish. If order flow is bullish and is breaking through these buy side pulls and continuing to push up, right, we will just expect that to continue. So now we have created another 5-minute fair value gap. We're not trying to call the top. We're just continuing to follow this order flow, right? Discounts holding, discounts holding. At this point, we still would expect this to hold us. This is right at 9:30. We notice that at 9:30, we can't even go into the consequent encroachment of this 5-minute. So then we hold that and break through a high, creating a market structure shift while leaving behind a 5-minute fair value gap. And this is where our entry comes. So as we go to the 1 minute, you'll see the actual entry, but we're using the 5-minute fair value gap, understanding every discount already has held. We're reaching for a high time frame objective in the form of that daily swing point. We can continue to trust discounts will hold us until we get into that area. Right, so if we have the execution here as we trade into that 5-minute, we go long, and then we exit right on the high. So it gets the high of the day, which is pretty nice. Here on the 1 minute now, we can see it a little closer. So these are all the 5-minute fair value gaps that were holding us. You'll see how we retrace interim hold, retrace interim hold, consolidation, which will become important later as we go short. But we're retracing into all of these discounts and continuing to hold, right? Trade higher, trade higher. 9:30 now has created, or I guess prior to 9:30, excuse me. Once again, the YouTube model clearing equal lows. So just like we saw in London, right? The same setup gets formed, clearing short-term lows, breaking through buy side, leaving behind a fair value gap. And now at 9:30, when we fail to run the lows that were created, we can understand that this is going to hold us. Right? Because we've tried once and now twice, especially at 9:30, which usually can be quite volatile, and we'll try to create a Judas swing. At 9:30, when we barely can wick into this fair value gap, candle body still remaining above, that's a good indication price will want to continue into our targets. So now we see price break through this high. As we mentioned, this is a 5-minute fair value gap. So we have a 5-minute fair value gap, and within that, there's a 1-minute fair value gap. That is where our actual entry came. If we look at these, notice how the consequent encroachment of these levels is the same. So once again, price synchronizing within the time frames. That's just the high probability entries that we look for. So our entry came right on the 1 minute. We're able to catch the low of that, hold it up into the swing high. Missed the actual high candle by 1 candle, unfortunate. But objective still remains the same. We get out right on that level. we give one more tick higher, and then we actually break lower. We pointed out we had an opportunity to go short now. As soon as we break through the last discount formed, so this volume imbalance, if we break through that, we can look for that to become an inversion. And we actually break through it with a bearish fair value gap. So breaking through old discounts with premiums, that is signatures we like to see, especially now coming off of a higher time frame PD array. Right, clearing those liquidity. We break lower, we hold, and now it's off to the races lower. We had shared another entry on our other account here. So as we start breaking lower, right, we're aiming really for the lows that were created prior to that run up. So just an exaggerated sell model here, right? Buy side of the curve coming down to the sell side. So we had lows here, we had lows here, and then we were looking at this as kind of our original consolidation for the morning target. As we break through these lows, notice how quickly we do it, right? We do it with speed, not one up close candles once we hit that volume imbalance, straight through, and then we close below this low. This low here is also our breaker from high, low to the highest high. Oh, at the top here, right? As we break underneath, this lowest down close candle here becomes our breaker. So when we refine that area, you'll see how we are breaking underneath the breaker, closing underneath it, and now creating a volume imbalance here. So at this point, once we create that volume imbalance and we've closed underneath this breaker, we can trust that price will want to continue to run lower. We're not trying to refill any of these inefficiencies here because price is in a hurry to now attack, right, these equal lows that we had aimed for. So we'll see how price uses that volume imbalance. With that volume imbalance entry, you just wait for that candle to wick into the previous candle's close, stop above the candle that creates that. And as you saw, we were simply targeting the equal lows here. So relative equal lows, right? Equal lows and then equal lows just above them. We come into it once, creating that perfectly equal low. So we now have created 3 equal lows. Notice how we left behind a discount, or excuse me, a premium fair value gap. So as we create this volume imbalance, we break lower, consolidate here around just an old low, right? So we hit one liquidity pool, consolidate quickly. As we're breaking under that, we create now a premium fair value gap. We create that equal low, returning into the premium, and then only then do we attack that sell side. So even engineering quick short-term liquidity, right? Trying to bait people that may be trying to buy here, trying to use the triple bottom or whatever retail may be thinking. But we get through that. We then create this here bearish fair value gap. We wanted to see if we would get above it and continue to push. Instead, we just kept consolidating around that liquidity level. So at this point, it's starting to bounce around that old liquidity. We give a slight retracement back up into a 15-minute fair value gap. So let me go to the 15-minute here. So this level here now is our 15-minute. Right, we have a short-term highs here as well. So a short-term high. At this point, price is kind of established that it wants to continue lower. Short-term high. Right, we've cleared a daily objective. We would expect price to retrace now into a range, giving a larger retracement. So this level here is our 15-minute fair value gap. It's also aligned with, notice this, our volume imbalance. So now during this little setup, right, as we're heading into lunch, really the 11 o'clock hour, we create an equal high right on that 15-minute fair value gap. We then run that high, returning into the volume imbalance and the 15-minute, and then we break structure at the low. So we create that YouTube model. This candle here is a swing low. And as we break through that low, we leave a fair value gap. So now we can trust this setup once again to hold us. Right, stop above the swing high or above the candle that creates the fair value gap. But you see how we engineered this setup, break lower, and now we continue to push through just sell side that was created. So we spoke about how these equal lows were suspect to us. Because if we're going to engineer equal lows and price is already kind of predetermined to go lower, those equal lows will be targeted. So we go up quickly to pick up some short-term buy stops, return into that inefficiency. We then give us that setup we're looking for, attack into that sell side, and now we just return into other important key areas here. So we had first the new week opening gap, right? Another set of new week opening gaps. And then we had our new day opening gap level here. As price starts delivering into all of these areas, we're just following it, right? Seeing how far it wants to go. We notice that once we hit these new day opening gaps, we clear quickly the equal lows that was created near it. So right, we have these equal lows that get cleared and we return into this tiny fair value gap here. So we wick into that, we hold the new day opening gap, and now we break structure here through this high. So at this point, we've engineered that breaker, low, high, lower, low, broken. We only use the most recent discount. So we create this as a breakaway gap, can't even get back into it. We get above the new week opening gap here. And then as we kind of pointed out in the recap, where we formed that YouTube model coming off of the new week opening gap. So short-term low being cleared. We break through that at the high, while at the same time breaking above the midnight level. So this is the midnight level, this dotted line. New week opening gap, new week opening gap. So we're breaking through all of this while engineering the setup we would look for to send us higher. YouTube model breaker, right? Order block, that's what ends up actually holding us with the wicks. But for us, our entry just came on consequent encroachment of the actual fair value gap. So playing with that consequent encroachment right near the midnight level. Could have used any of those. As you saw, we enter right on the low of this candle. We give one more kind of stab down into the order block level. And then ultimately we get back above that fair value gap. Once we close back above it, we have no interest in returning into it. So this next candle taps it quickly. And from there, we just continue that bullish delivery. So as we create new discounts, we would expect those to hold as we deliver into our objective. This is where you have the opportunity to stack positions if that's something you would like to do. But for us, we were just aiming for a premium fair value gap because we weren't sure, even though we have already delivered a lot lower, if price wanted to just continue to deliver lower after returning into a premium. So as we looked from that current range that we were within from high to low, we notice here's equilibrium, right? Here's a fair value gap. We like this fair value gap as it was aligned with that old daily high. So now for us, first partial came at the short-term buy side. So it was aligned with 5 handles. We close at that buy side pull, and then we exit right at consequent encroachment of that fair value gap. So beautiful precision there, catching that swing high in the short term. We end up creating even fractalized seek and destroying here. Like if I was to show you this on a 30-second, which we'll do just for fun here. Or if I show you this, this is just seek and destroy. So high, low, higher, high, lower, low, higher, high, lower, low, higher, high, lower, low, higher, high. I'm just consolidating around that old daily high. And we're inside of lunch hour. We've already delivered into an objective. So it just makes sense for price to consolidate there. At that point, we actually hold the most recently formed breaker. So high, low, higher, high. We actually break underneath that now. Break underneath the consolidation. As we mentioned, we're still looking for somewhat lower prices. So after returning into a premium, if we start putting in that bearish structure, we would expect that to hold us. So we have our breaker here. All right, let me drag that out. We use it a few times. After we create it the first time, we trade up into it, break structure here at this low, still return into it, consolidate. So messy delivery within here, but you see that it actually holds us at the high. No candle bodies ever breaching that level. As we head into the afternoon, we get a little short-term, right, run on stop. So we clear this short-term high. Don't break structure. At this point, we have created a bullish fair value gap. But notice now as we start breaking underneath this, we have created opposing premiums. So we're starting to leave now, right, old premiums, leaving new ones, and we just continue to run lower. So after clearing that daily objective in the morning, as we mentioned, we still would kind of look and expect price to continue to just target sell side. It's a very important area, daily, weekly level. So if we're going to start breaking away from it, we can expect extended retracements. As we head into now power hour, so power hour is here. We had already broken structure, so we held the breaker. We break through lows, we break back underneath the midnight, break back underneath that new week opening gap. And just like over here, if we're going to break up and through that level, and we're forming setups along the way that align with it when we have objectives to meet, we could trust that those setups would hold. So now, after reaching that objective, hitting that inefficiency, when we start returning for sell side objectives here, still targeting sell side, The setups that form near these new week opening gap levels, we would expect those to hold us. So notice how we first hit the midnight, quickly bounce. We then break underneath the midnight level with a fair value gap, breaking underneath the new week opening gap as well. And now as we offer the retracement, right, notice how we didn't hit the new day opening gap here, instead leaving short-term sell side. So engineering sell side just above a key level. But we give this retracement, also engineering short-term sell side here and here, so that's nice to see. As we get up into our premium now, we hit that fair value gap. Notice how the candle bodies hold the new week opening gap beautifully. From here, we then break lower, right, closing underneath this swing point, so kind of confirming that break in structure. We return once more into that new week opening gap one more time, break through a low again, and then at this point, we were able to go ahead and cut through the sell side here, and actually give it an extended run lower all the way into now our original 4-hour fair value gap. So we've been using this because we've really been consolidating around this 4-hour fair value gap. And you notice how after hitting a daily objective here, we just revert back into another higher time frame objective that we've been using. So we go all the way back down into that 4-hour fair value gap, giving you even one more quick opportunity to play that last little 10 minutes of the day. So as we hit this fair value gap, we overtake a bearish fair value gap with a bullish. We would expect price to want to return back into the range high to low, especially coming off a higher time frame discount. Price trades into those 1, 2, 3, giving multiple opportunities. Then we rally up into new day opening gap and just the untouched inefficiency here. So always returning for unfilled inefficiencies, right? Price moves from liquidity to inefficiencies, and that's really all it's aiming for. But yeah, that was our day there. So overall, clean morning. Was able to catch the swing low up into the swing high, catch high of the day. I guess not the exact high. Missed the high of the day by one tick, we'll say. But we see how precise we can get with these entries and exits. And then we're able to catch it up one more time. This one's more of a counter trend trade, just returning up into premium fair value gap before price ultimately held from there and reverted lower. So almost catching kind of the high of the afternoon session as well. But going forward, we'll see if, right, we're still really consolidating in here. So as much as price is moving back and forth, it's not really going anywhere in the grand scheme of things, right? Still in here, consolidating around these areas. Coming off of such a daily objective, I would want to see if we couldn't continue to maybe visit sell side one more time. I'm kind of looking at this as one large, 3 drives lower, so we can go 1, 2, potentially hold near today's midnight level, and then attack this low one more time. So yeah, I'd actually would look to see if we didn't want to attack this low here. If we do that overnight, then that'd be cool. But if not, then we'll see where we are in the morning. We'll come back tomorrow morning, same time, 9:25 Eastern. So until then, have a good night, everybody, and talk tomorrow. See ya.